Hi, welcome to the Market Alert for Friday, the 20th of December 2019. So yesterday we see that stocks and the VIX decouple. And what we mean by this is that the volatility is increased with the stock market as opposed to a normal market where we would see them move apart. As you know from the Market Alert in the implied volatility section, they're actually moving together. This is just the VIX and the stocks though. It's a bit different for implied volatility because that's the risk component of the option. And then ahead of the option expiration, bonds dump and pump pattern. But underneath this, I just noticed that we've also got the world's most liquid stock market is now illiquid, as it was in the 2008 crisis. And as the Bank of America said here, it's hard to see this environment improving as long as central banks continue to attempt to manipulate markets, and with high frequency trading playing a dominant role in liquidity provision. Well, something that we've spoken about for an awful long time, but they will rig it as long as they can rig it. So yesterday, after all of the impeachment farce, we see the stock market make a new all-time high and continue to do so on the overnight market as well. We'll just mark up the all-time high for yesterday, 28,407. Will we get to 30,000? Who knows? But at the moment, they're doing their damnedest to keep this market moving to the upside, albeit on fresh air, as we can see down here. So the market continues to move, and we can see this beautifully presented for us yesterday. It was handed on a plate as the market tested in the pre-market session, closed above the 200 MA, followed by a close above the DP level, and then we see the buying coming in. Bit of a battle to begin with, but nowhere near the 20 bar moving average, and then prices break and move to the upside. We get a pullback to the previous day's high before we get the market then being pushed higher again in the early part of the evening, and then just before the close, the market moving to the upside. In fact, that's not the close, that's going to be the opening of the evening session, isn't it? Nope, it's just at the close, just at 9 o'clock, and then slightly after we see the market moving higher there. And of course the start is here where you see the swap in the pivot points. So they ramp the market up into the close. We then got a 76% retracement, and the market on the overnight is looking slightly weaker at the moment, moving to the downside there. So it'll be interesting to see if it can hold at the 200 and let's get rid of this, the 200 and the DP level, which you can see clearly there. So the implied volatility for yesterday is down once more, 1039 down to 1021, which we can see there's moving off a bit. And then visually, you can see that we've still got all of the green down at the bottom, down in the lows. Very important area for the implied volatility. And also you can see their prices above. But like I say, as much as they want the market to move to the upside, it is due for a correction, so keep this in mind as well. They've updated the 3-month 10-year yields, and we can see now that we're getting a nice build up of the yield. It's increasing to the upside, which it does after it's been inverted, moves higher, and then the recession kicks in. So poor old Boris has got that to contend with in May and June of next year, major slowdown. And here you can see the intraday picture there. You've got the yield up at 0.35. It's okay, I was just looking across at another screen there, and the German DAX is selling off at the moment. So I assume that the Dow will be following suit, or it will be driving it, but something's going on at the moment now. Right, let's have a look at, we'll just have a quick look at Deutsche Bank while we're here. Still managing to hold. It keeps playing with the 200 MA. That's how it's been for a while. The 640 level is still on the charts here, the market's not getting down to this because, as I've said before, I believe that the Federal Reserve is providing the liquidity for this market. And then finally, in Bitcoin, as you can see, after Wednesday's spike to the upside to the 200 MA, the market has now once again returned to being sideways, which is no surprise really, as we see prices back below the 20 bar moving average in the daily chart and in the 15-minute chart. Yesterday we had a bit of a whipsaw. The market was short and then whipped up and then whipped back 76% and then just went sideways. So initially $150 move that petered out to less than 50, and we see there, and then overnight the market barely moving as well. So Bitcoin having these intermittent periods of volatility and then resuming its normal course of trading sideways there. Okay, that will do it for this one. It may be the last one. I'll see what happens today if I record on Monday, but we are heading into the Christmas celebrations, and the markets will be half day on Tuesday, open all day Monday, and then we're closed in the UK. The US will resume on Thursday, I think, with a half day. Friday, they don't celebrate Boxing Day in the US. But we'll see. But I would expect next week to be very quiet indeed as we go into the annual festivities. Okay, that's it for this one. If there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.